Sudden up move in sugar names. So just pull up Bajaj Hindustan, Rana Sugar, Shri Renuka. Very sharp spike seen in all these stocks, and intraday will come up for you on your screen. There you have it. And speaking up on the volumes as well. For the markets per se, we're trying to get off our low, so the Nifty's recovered about 50 points from the day's low, and it's courtesy up move in names like an SBI Life. Axis Bank is off from the day's low. In fact, it's in the red, but it's at the day's high, and Reliance Industries is now back in the green by a smidge, but it's moved higher, as we can see.
Yes, it has. So all these stocks in focus, but one space that has been doing really well for the last couple of days is the tire space. Let's talk about JK Tyre Industries delivered a good quarter too. A colleague Danish caught up with Raghupati Singhania, who is the managing director of the company, and started by asking about the outlook for the rest of the financial year as well as the demand scenario. Let's listen in.
Well, we are looking to the rest of the year with a lot of hope and expectations. And the major reason is that we find that the plateauing in the raw material prices, and even we hope that the oil prices reduction, which are merely indicative for the moment, of course they have a lag effect of 2 quarters at least, should sober down the market, and at least they will may not be any increase, substantive increase. The outcome is that we should be able to improve our EBITDA margins, and we have in the last 2 quarters as well, quarter on quarter, been able to improve a couple of basis points in EBITDA margins, and we see that in the next 2 quarters as well, we should be able to maintain our progress in improvement in EBITDA margins.
Right. So talking about the demand right now, how is the current demand like? And talking about the replacement demand as well. So, and we are seeing that it's such an unprecedented time. There is a lot of things happening globally. So in this scenario, how are you able to deliver to your customers?
Look, thank God the demand is steady. And if anything, if I were to deal with the 2 categories separately, the commercial tires, they are finding a lot of traction now, thanks to the whole lot of construction and infrastructure building activity going on in the country. So we are finding increasing movement of commercial vehicles, as also a higher output from the OEM manufacturers. So therefore the demand is rising, coming from there. In terms of car segment, definitely there's an upswing in the demand. You can see it from even the sales of the cars and backlogs and so on. So we are looking at a good future. To my mind, the auto industry should grow well, and the tire industry should also be able to go to nearly 8 to odd % in the coming couple of years, and should be able to maintain their growth. So back on this growth journey, we have been able to improve our sales presence in the marketplace. In both the quarters, incidentally, we have been able to gain our market shares in both truck and bus segment as well as in the car tire segment. That gives us a lot of hope and expectation. And of course, that has been backed by more innovative, new differentiated products. And we propose to continue to do more of the same.
Right. So talking about supply chains right now, we are seeing that globally almost every industry is suffering because of supply chain disruptions. So what is the update as far as JK Tyre is concerned? And what about the input cost? We have seen that input cost has risen over the past some time. So considering all of these issues, the supply chain disruption and the hike in raw material prices and the input cost going up, what's your current situation like?
The supply chain got complete haywire in the peak COVID period. But thank God in the last 8 months, things are normalizing bit by bit, but surely. Both international supply chains in terms of shipping space availability, container availability, and the rates. The rates haven't fallen as much as it has fallen for instance, Southeast Asia to US. India to US rates have fallen very marginally, but there the rates have fallen less than half. But that's something else. That's a global shipping scenario we can't do much about. But the supply chain constraints have more or less eased off now, more or less, as I say, both domestically as well as international. But the cost that we incurred, extraordinary costs on account of that, we have suffered. And the material costs which have gone up, as I said, that at least they seem to be stable now. And we don't see it going up any further. If anything, as you were also just suggesting, may in the coming 2 quarters, they may taper off a little bit, a percentage point here or there, may come down. So that should help us in our margins, and they should help us in our sales.
Right. So globally, there are recessionary fears, and do you think because of this your exports will suffer? We are seeing that countries like UK have announced recession, and even the Eurozone is supposed to slip into recession in some time. So considering all of this, do you feel that your exports will suffer?
That's certainly a concern, but luckily we have been directing our exports more to Middle East, to South America, that is the Latin American countries, and to African countries. So therefore that markets are safe. US exports have been large for us, so at least they will be more or less stable, I think, and hopefully we should be able to maintain and get away, if I may use the word.
Right. So very lastly, the union budget is just around the corner. What are your expectations? What should the FM do so that you benefit as an individual and the industry also benefits?
You see, it is very difficult to predict on the union budget and unfair, but all I can expect and hope is that government is quite aware of the need of incentivizing activity, industrial activity, production increase, cost management. So I'm sure they will make it a forward-looking budget.